It's about that time of day again. My name is Joseph. It's Thursday evening, January 12th, 2017. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and FDAX this evening. Crude is bullish and trying to retest the highs, but we've started trading sideways in the middle of today's range, which tells the buyers to look for traps tomorrow. E-mini S&P is bullish, trading inside a multi-tiered channel tonight, which tells the buyers to look for trading opportunities at levels of support below the channel. Gold is bearish, trading within a channel, so the plan is to sell the highs, but we have that 1200 big round number that may spoil the fun tomorrow. We got a plan for gold, and we'll see what happens for a Friday session. The euro is bearish, trying to finish rotation back to the lows this evening and looking for trading opportunities up at the highs of the bear channel tomorrow. The FDAX is bearish, trying to retest the low, but a rising support trend line is in the way and giving the buyers a big opportunity to grab control and fill the gap left open from last night's close. I got another great newsletter for you guys and gals tonight. Plenty of reliable trading opportunities setting up for tomorrow's Friday session. Before we jump into our charts, though, I do want to remind you, the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, it's only a small snippet of the full-length version. Follow the link in the description of that YouTube video and come join me for the blog, or on the blog for the full-length version and all 5 markets. Also, don't forget, while you're here, join the newsletter. I'll send you an email every evening when this video is ready to be watched. Don't forget to catch me on Twitter throughout the day. I'm always posting my charts throughout the day. Follow me on Twitter and Facebook. Below the video tonight, don't forget you can download all the charts in tonight's video. That's right, you can have those charts as a reference for your trading tomorrow. And of course, we can't forget about the free pass, upper right-hand corner. If you're not a member of mine, please don't forget to grab your free pass. You're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. I can guarantee you that. In the upper right-hand corner, we got a great frequently asked questions page. If you're brand new here to School of Trade, and you know I can't resist, right? I'm always here to help you guys out every step of the way. Hit me up on the live support button on the right-hand side of the website if you have any Q&A along the way. Hope you guys had a great week so far. Boy, oh boy, what a great second week of the month it's been. Now, before we jump into the charts, though, let's take a look and see what we have on the calendar here for tomorrow. Tomorrow's Friday the 13th. Now, I'm not a big superstitious type of trader, but I'm sure there will be some folks out there that will try to stay away from the ladders and the mirrors tomorrow. I don't expect to see anything too big of a difference here for tomorrow, so I wouldn't worry too much about Friday the 13th tomorrow. What I would worry about, though, tonight is we've got some yelling on the microphone tonight in a few hours. We're going to hear from China, right, in a few hours here tonight, so be aware if you are trading the overnight session, Asia, early parts of London, right? There may be some backlash, right, to that Yellen speech tonight at 7 p.m. and of course the trade balance at 9 p.m. tonight. Going into tomorrow, the Friday the 13th, we of course have we've been waiting for the big news all week. Bunch of big news tomorrow morning piled in around 8:30 a.m. Eastern time. The big headlining news, of course, will be the retail sales number at 8:30 a.m. Eastern time. Right, we're a bunch of consumers here in the U.S. Right, so we know that retail sales will be a definite headlining number of that tomorrow. So be aware. We'll expect some added volatility going to the morning session tomorrow. We get some minor news, some business inventories, consumer sentiment, blah blah blah. I'm not going to worry about too much about that stuff. Right, we will be looking forward to a big reaction to 8:30 news tomorrow morning. I also want to remind you as well, tomorrow's a Friday, and of course Friday mornings are always the same, early in, early out, meaning that at the end of the day, at the end of the week, at the end of the month, ahead of a holiday weekend, we get a holiday next Monday, we are expecting volume to dry up a little bit earlier at the end of the day on Friday. My rule of thumb on Friday is 11 o'clock, right? Once we get past 11 o'clock, you can manage open positions, but I have a very hard and fast rule that I'm not entering into new positions after 11 a.m. on Friday. Again, it is a holiday weekend, it is a Friday, it is the end of the week, and of course with that holiday weekend, right, we are expecting to see a little bit of lower volume, a little bit earlier than we usually see. So early in, early out tomorrow. Again, big news here tonight, overnight from China. Big news tomorrow morning at 8:30 a.m. And while I'm on the topic, right, of this holiday weekend, I'll wish you guys a very happy holiday weekend. We will not have the newsletter on Monday. That is the Martin Luther King Jr. holiday, of course, Monday the 16th. So please be aware of that. Markets will be open on Monday. They will be open on Monday. So if you do want to trade, just be aware. Banks are closed, schools are closed here in the U.S., right? That means parents are going to be keeping track of the kids, and of course they won't be. They'll be distracted from their desks. So even though the markets are open on Monday, be aware of low volume. Be very careful on Monday. Anytime you have a holiday and the markets are actually open electronically, right? Just be careful. We will, of course, will be closed on Monday, right? In observance of one of my favorite holidays of the year, the Martin Luther King Jr. holiday on Monday, and of course the no newsletter on Monday night. All right, so be aware of that, right? Trade at your own risk on Monday during the holiday. Let's jump right into it here, going into Friday's session. Got a great plan here for you guys to wrap up what has been an incredible week here. We had an incredible week in the trade room, an incredible week in the newsletter. Hope you guys are doing well out there as well. Crude, let's grab some crude. Let's see here. The black gold is bullish and trying to retest the highs, but we've started trading sideways in the middle of today's range, which tells the buyers to look for traps and seller failures below the range and a successful breakout pullback above the range for a move going back up to retest the high. Now, for the sellers, they need to take control first, so they need to see a strong breakdown that can hold the pullback for a retest of that low. Really, the two big clues in this chart right now is the bull channel. This bull channel you can see here does not have a break and a retest here if you're a student of mine, looking at the price action cycle. And so, of course, that bull channel tells me that buyers want to buy a low, right? And their objective right now is get back up and retest the high. Short-term objective right now is back to 53.50. If they can break through and hold that pullback, they'll go hunting for that long-term measured move. Now, that long-term measured move, obviously, is being calculated by this pullback. So if we do end up going lower before we go higher, right, that measured move, of course, will be dragged lower as well. Second big clue here on the chart tonight, you could call it a trading range, you could call it a triangle, right? It's pretty much potato at this point. It's a range bound market, and whenever we see a range bound market, we know we're going to use, if we have the possibility, right, we'll use the bias going into that range, right? That'll be the bias. And so, of course, we assume now that buyers will be looking to buy low with traps or a breakout pullback above that range high. Some additional information on the chart tonight. AB equals CD. That creates kind of a buy zone down here, right? Maybe call it a buy zone down here if you want to, right? Maybe a no sell zone, if you want to as well, right? If you want to be a bear on this tomorrow. So the buy zone down between that 71 and that 60. And so really right now, if you're a buyer, you're looking for opportunities here to grab those traps and failures below the low of that range. If you're a buyer, what I'd love to see is that trap low, right, and then up breakout pullback. I mean, that'd be a dream come true, obviously, for the buyers, right? Buy the seller failure, right? Buy the trap low, and then usually what happens is those little traps below ranges usually get the sellers trapped in. When they exit, they're buying their way out, prices running higher, and then of course, right, that shoots that price through the high, and then we can use that, right, breakout pullback, right, to go back to those highs. What you want to be careful about though is trying to buy too close to that high, right? Remember, be careful because the objective right now is only to get back to the high, right? So what may happen is we may see it trap low and then shoot up and then kind of sit there for a while. You don't want to take that bait, wait for it to pull back, right? And that'll be the one, right, that you're going to want to buy, right? It's always difficult to get a reliable trade buying on the way back up. If we do make a run higher, don't forget my old trusty rule, right, for that breakout pullback, get that moving average up above that 53.50. Remember, the high of day is the objective. Once we get to the objective, time out, wait for more information. Okay, we may see price continue through it. If it continues strong enough, right, we'll get the moving average to follow through. It'll pull back, right? And when it does, as long as we have that pullback above that 53.5, right, we should be good to go as far as the strength needed to confirm that we're trying to go to the next objective, right, which is the measured move. We may also see this price dip lower back to the high, right, and then really struggle, right, and if that's the case, then this becomes a trading range. Right, we go back to the highs from the trading range, and your focus is going to be to keep buying that low, right? Keep waiting for it to come back and buy it on the way back up until something changes. Now, what about those bears, right? The bears don't have control right now. Here's a good example. Buyers took control, right? We talk about market psychology quite a bit throughout the beginner, intermediate, and advanced courses here at School of Trade, right? buyers took control. Have the sellers taken it back? Nope, nope, nope. Therefore, the buyers still have control. It's up to the sellers, right? They have what we call the burden of proof, right? They have to take control as well. So really, the big hurdle right now is this measured move. You got to get to that measured move. So what you're looking for is I'd be looking for, first of all, those buyers to fail, and then strong move down, breakout, pullback. I like to use the moving average again, as I said before, right, as my kind of a strength meter. You know what I mean? As a way of defining whether or not we have enough strength going below that low, right? You don't want to sell into the measured move. You can, but it'll be a lower reliability trade, waiting to get below it, get that moving average down. And then again, you know, we don't want to sell into that low of day, right? Let's say, for example, we open up here, right? We run low, we slam lower, right? And we don't get any chance to sell it. Obviously, we'll see some profit taking, right? And then up and then back down, right? That's when you want to be selling it, right? You don't want to be selling into that low. The exact same is true for the buyers trying to buy into that high. If for some reason tomorrow, again, it's a holiday weekend coming up, if for some reason we just stick here, right, stay patient, probably not going to happen, right? But if we do find ourselves inside of a range here and it continues tomorrow, right, the longer that range develops, obviously we want to be buying that low for retest the high. But if we're sitting here 9:30, 10 a.m. tomorrow, right, we're not seeing any action on this, right, you can start buying buying low, selling high, and just fading that range, right? So in the short term, it's a bull bias, but if it continues here tomorrow, right, we'll quickly lose that bull bias, and we'll focus on buying low, selling high, focusing on failures, avoiding the middle, right, and using the 2-try rule, which of course we teach all that stuff, right, inside our advanced course here at School of Trade. Let's keep going. Don't forget, we'll be trading crude tomorrow in real time in the trade room. Look forward to seeing you guys there. How about some S&P? The E-mini is bullish and trading inside a multi-tier channel this evening, which tells the buyers to look for trading opportunities at previous levels of support below the low of the channel for a move back up to retest the high tomorrow. The buyers have control, and they would love to see price pull back to the reversal lines waiting below that channel on the way up to filling the gap from yesterday evening's close. We don't see this very often. Very big clue here, right? That's yesterday evening's closing price. And that's going to be a big price magnet if these buyers can keep this thing moving higher. Get the prior month high and the gap fill up there at 71 to 73, right? That is definitely an objective right now for the buyers. Obviously, we got a bull channel. The bull channel is pretty easy. Whenever we see a bull channel, what do we know? By the low of the channel. The only thing I'd be concerned with right now is you can see that prior high. You can kind of see how it's right? It's kind of creating a little bit of an obstacle here. That tells me that really the easy money will be down around this area here, right? See if we can get this in a trap, pull back, and then give those buyers a chance. Whenever we see a bull channel, though, right, we're looking for channel rotation by the low of the bull channel, right? A little bit of concern there with that resistance there. So, you're looking at a breakout pullback here, right? Get above that, right? Get above that resistance level, again, get that moving average up above, clear through it. That way we know that these guys really do want to get that gap filled overhead. What I would love, though, is to see us get a chance to use some of these prior swings, right? Any of these prior swings really, right, will be on our radar screen here. So, of course, as price pulls back, think of a couple scenarios here. As price pulls back, sellers fail, and then back up. Right, that's one right there, right? Seller failure. Again, think of it this way. Right, price goes lower, sellers try, they fail, breakout, pull back, and then back up. You can buy both of those actually, right? Because it's a bull market. In a bull market, you can buy seller failure, right? In a bear market, right, you can sell buyer failure. But the minute this thing turns to a bear market, you don't want to be buying seller failure anymore because it's no longer a bull market, right? Go back and rewind that video for me, right? If you didn't pick it up on the first time, right? In a bull market, trying to confuse you more. When the bulls have control, I can buy seller failure, right? Because the bulls have control. However, if the bears take control, for example, something like this. Right, a little bit deeper pullback now, right? The bears take control, right? Hold their pullback, right? Bears will take control. Then we got to be careful, right? Then a failure, nope. Wait for the pullbacks, right? Then you want to buy those, right? Rather than just buying the failure.